that correctly, Craig?
It's pronounced Wichner,
Wichner. Hang on, let me write that down, guys.
like SH. Craig Wichner.
Okay, great. Cool.
Here we go.
And it's Farmland LP is the company.
Yes, I got that.
And welcome to the Smart Money Simplified podcast with your host, Brent Mikosh. Brent, I can't contain my excitement about this podcast today. To be really honest with you, I do have a personal investment in it, not an actual investment, just a curiosity and intellectual and emotional investment in it. So it's good to be with you, and I'm excited to hear this conversation today.
I'd agree with you. I mean, we're going to talk about agriculture. We're going to talk about farmland as an investment. Specifically, we're going to spend some time talking about this transition from industrial farming towards regenerative rather, and organic farming. And you and I have had enough conversations, Bill. This is a hot button issue for me as well because I
Yep.
look at a couple things. I think that the food that we put in our body is massively important. The economic incentives as they exist right now, they're all around in many ways industrial style farming, but that's actually starting to change. And I think that there's a way to make this regenerative, organic, what I would view as healthier farming, something that becomes economically pretty viable as well. And I think it's hugely important. I mean, you just look at the rise of chronic disease in this country over the last 30 or 40 years. And I think there's a lot of reasons that we have that this is the case. But we can start with the food that we're putting in our body. And if there's a way to get your dollars behind an asset class that can do a couple things. First, make you money, because let's be honest, there's got to be some profitability involved in it. But also move this ball forward in terms of providing really good, healthy food that hopefully is going to make the country a lot better off and a lot less sick. I think it's a really cool thing. So I've got a great guest today. I've got Craig Wichner on, and he is the founder and managing partner of Farmland LP, and they've done a number of different deals and fundraisers so far in terms of transitioning this agricultural land toward a more sustainable or organic model. And with that, I'm going to introduce Craig. And Craig, give me some background. I mean, how'd you get into this? What was the genesis of getting into farming?
Great. Very nice to be here with you, Brent. Looking forward to this conversation. Started Farmland LP 15 years ago after a long career in building companies, venture capital, and private equity. But I grew up managing commercial real estate with my family and spending summers growing up on a farm. And uh, and my degree is in science, so I love science. And so, really, Farmland LP combines all of those things where we manage high quality farmland, essentially as commercial real estate. I can talk to you about how that helps with regenerative agriculture, how it's important for regenerative agriculture, and but really fundamentally, and also I started this after my daughter was born. So she's 18 now. And when she was born, I got really clear that, my life was now about helping her dreams come true. And in that moment, I also saw that we weren't leaving things very nice for them. uh, and, uh, and so the question for me was, what was I doing to really make a difference on the planet for her and her generation?
And we're definitely going to dive into that today, but I want to go back a little bit. So you said you grew up in an agricultural community. Tell me about that a little bit.
So it's a little different. I grew up in Berkeley, California,
Okay.
but I spent summers on a farm, and so uh, and crops, waking up early morning and picking weeds from corn and milking cows and processing beef cows and building barns. So I have exposure to agriculture and farming, but I'm not the farmer of the crew. We have a great team of 50 people actually who do the farm management.
Now, where were you? Was this also in California, the farm?
Yeah, that was in the mountains, kind of towards the middle southern part of California.
Oh, very cool. Awesome. So, yeah, what was the genesis then? So, you had this upbringing in Berkeley. Obviously, you had the summers where you got to see this part of life, which is probably a little different than growing up in Berkeley. Where did that lead you in terms of your education and then ultimately getting into real estate and then to where you are today?
So growing up, I loved science, and uh, uh, actually in high school, I wanted to become a genetic engineer and open up a genetically engineered pet store. So you can come in and have custom pets designed for you.
Okay.
That was my little high school sci-fi fantasy, but I really loved science uh, and really biology fundamentally. So my degree is actually in biochemistry and molecular biology, minored in economics. I helped start a biotech company that we took public. We developed a treatment for metastatic brain cancer
Oh, wow.
on that. So I've always been kind of entrepreneurial and focused on building companies and built a number of companies over a number of years, and then kind of moved into venture capital and then private equity on it. But really cycling back kind of in a long arc back to what my family was doing, which was buying and managing commercial real estate, apartment buildings.
Okay.
Uh, and that's what we've done kind of my whole life. And Farmland LP basically came out of that. It's a little bit so, and glad to talk about how that applies to farmland.
So,
Glad to
so
take your question.
did you have the idea for Farmland LP before your daughter was born, or was there something that occurred? Obviously, then it was the catalyst saying, "Hey, this is how I want to go out and change this part of the world."
Yeah, I really kind of lived in the question of what was I really doing to make a difference for 2 years on that, and uh, I actually the idea for Farmland LP came around just because I wanted to buy farmland for myself,
Right.
just as an investment, kind of as a plan B scenario, basically.
Yep.
And so, since I just dive deep on things. I did a tremendous amount of research on soils, on climate, on water, on crops, etc., and uh, ended up taking a week-long trip up to Oregon, where we had identified as a really great place to buy farmland, high quality farmland with great water, great growing environment, and a good cost. So went up there for a week on this road trip with three other friends who were experts in various other domains, and looked around at farmland and really saw that there was a great opportunity to convert farmland from conventionally managed farmland to organic, regeneratively managed farmland, increasing crop rotations, bringing livestock back on the land. But in order to do that, uh, we needed at least $10 million worth of farmland to make it economically viable if I was going to drive the tractor, and would need about $50 million worth of farmland if we were going to get the cost down to an institutional level, like I was doing in private equity. And so, driving back from that trip, ended up crafting Farmland LP, and I've been working on it full time ever since.
Now, when you were exploring this as initially for as a personal asset class you wanted to get involved in, did you understand, I guess, what we were doing to the land when you began looking, or was it through the process of trying to identify properties that you would personally invest in that you realized that, like, hey, the way that we're running agriculture in our country might not be the best thing for the land and for the ultimate product that comes off the land?
It's what you just said. The very much seeing how we were managing farmland from a chemical, essentially factory focus, a way of managing farmland. Giant monocrops, tremendous inputs of fertilizers, and pesticides, and herbicides, and genetically modified crops, and all these farmers were growing essentially commodities, just generic commodity crops that were priced based on the global market and no premium for quality. And what I saw and we saw was the possibility of really focusing on healthy soil biology. How do you basically get from the operational efficiency of monocropping to the maximum productivity and soil health of regenerative agriculture. And so it was basically that shift. What we really identified was that if you're focused on operational efficiency as a farmer, let's say of 5,000 acres, what you do is the most operationally efficient thing to do is to buy the largest tractors and equipment that you can, plant all the land in one crop like corn, and then plant that one crop over and over and over again until you can't do it anymore. And that form of agriculture, that monocropping, really requires, it's really bad for the soil. It really requires a tremendous amount of all these chemical inputs that I mentioned. We knew that the best way to manage farmland from a healthy soil biology standpoint was essentially modeled after the British agricultural revolution, the four crop rotation. So, four different crops growing each year and rotating over time.
Let's talk about some of the chemicals and pesticides and other things that we're putting on this land. So I live here in Arizona. We go out to San Diego, Southern California quite a bit. And you're driving through the Imperial Valley, and obviously massively dense industrial farmland. And if you look at that, you look at that map of the United States, and then you also look at cancer clusters that are around in different parts of the country. A big giant one happens to be there in the Imperial Valley, which, not knowing anything about medicine and not knowing anything about farming would tell me, all right, well, there's an environmental issue. It's an environmental process that's occurring here that's leading to this. Give me an idea of this sort of monocrop industrial type farming. What are they putting on the land to keep it yielding these same crops over and over again?
Uh, Herbicides, pesticides, uh, fungicides, and fertilizers, basically. And to kind of go into what that is, when you plant the same crop over and over again, you get a lot of insects, pests that eat that crop. So if you're growing corn, the first year you get some pests for corn that grow over that year, and then the next year you plant corn again. Well, now you have a whole bunch more pests that are there, and so they just from already large numbers, they grow a lot. And then you do it a third year, and now you've got a pest storm. So what
Right.
do? You spray toxic chemicals in order to kill those pests. And also, when you're monocropping, you basically create a great environment for weeds to grow there. So what do? You need herbicides to spray on it, things that are toxic to the plants. And you also get issues with fungus, and you need to spray for that. So you end up with a very chemical dependent form of agriculture. You're spraying at the beginning of the season, the middle of the season, the end of the season. You're really adding a lot of chemicals to that land. And what we say is everyone's downwind or downstream from farmland. So all those chemicals have to go somewhere. There's a tremendous, big giant problems with atrazine in the Midwest that's gone into the well water. So people are like just drinking it now, and there's just all kinds of problems with the chemical getting into our food system. That's just from the environment standpoint. Plus, there's the residues that are on the crops as well. And so people, I think, focus on glyphosate, which is just a herbicide that kills grasses. And it's actually one of the more benign, it's bad, but it's one of the more benign chemicals that they use. There's things that are much worse for human health. And what they also know is that the cocktail, it's one thing about researching just what's the impact of glyphosate on cancer rates, for example. But the problem is you're being exposed to 10 or 20 different kinds of chemicals all the time. And it's that cocktail of chemicals that can really cause a lot of extra damage that really science is barely just touching the surface of how it harms human health.
Yeah, I would imagine because you're then going from, to your point, one different chemical you might be researching to an exponential amount when you start adding in all these other chemicals. Um, Now, a pessimist might say, well, hey, we've got 7, 8 billion people in the world that we have to feed. This is just the only way to do it. Are you saying that in terms of, and then I really want to talk about your model and what you're doing and really the economics and the finances around converting this farmland. But is it possible to generate similar yields that we have since we've had this, so-called agricultural revolution over the last 40 or 50 years or so, and be able to feed the planet? Is that a pipe dream, or is it something that can be done?
It can absolutely be done, and I'll start out with the kind of feed the world tagline. That was actually created by CropLife International, which is basically a Monsanto uh, organization. And it was designed basically for them to sell more corn internationally, to plant as much corn as possible and sell it not only domestically, but internationally. So they're basically telling their farmers to go pedal to the metal on this. Uh, and today, and it's been very successful because now 53% of US cropland grows two commodity crops, corn and soy.
Right.
So huge amounts of these industrial inputs. But now the question is, well, can you feed the world on organic and regenerative agriculture? Yields do not have to go down when you do organic and regenerative agriculture. You just don't buy the seeds and the chemicals from those few companies that are right there. But just looking at the amount of farmland that we have, 40% of the corn that's grown in the US goes to feedlots, and 40% goes to ethanol facilities. So we're
Wow.
basically producing so much corn that we actually subsidize the production of corn into ethanol.
Right. And
And
just burn it.
so there's not only can you use our land to feed everyone all the calories that they need, but we're just really wasting the productivity of farmland today as a industry as a government plan.
So back to your original road trip up to Oregon with your friends that had some good background in this. It's 10 million bucks you need to buy this farmland with you driving the tractor. $50 million if you're going to essentially scale this thing. So is that, I'm guessing that's how the idea for Farmland LP came up, where you said, hey, we could package this thing up and bring in some outside investors and let it rip. Was that the thought process?
That's right. So I had experience doing private equity funds in the past, and so it was just really clear and investment real estate. So it was just really clear how to do it. And it was just a matter of really for the first time, well, what we were doing was basically just taking farmland and putting it into a real estate investment fund. And the thing that we were doing a little bit different is that we say we buy conventional farmland and convert it to organic, regeneratively managed farmland as an investment fund. So investors who are interested in that basically value add strategy are the ones who invested.
Now, was there other groups doing this at this point, or were you on the frontier of this?
Uh, we there were little groups kind of starting up around, but really we have been doing it the longest. We're actually one of the 14 largest farm managers in the U.S., and we're
Wow.
the largest focused on organic and regenerative agriculture.
So tell me about the math and the money behind this thing, because I would imagine if you're purchasing a piece of property that has been, heavily, I guess, farmed in the traditional capacity, at least in the way it's being done right now, there's got to be a process of bringing that land back up. The soil health, I'm sure, is really compromised, and you've got to get that right again. And how long does that take, and what kind of financial investment does it take to get this property producing in a way that's more in alignment with what your values are for the fund?
Great. So regarding the farmland that we buy, uh, only 2% of farmland is institutionally owned today. And so there's a lot of farmland that's uh, basically high quality farmland. It's just not farmed organically. And so, because there's so much farmland, we're able to buy high quality farmland that's actually in good health in general, and then take it through that 3-year organic conversion process. And that's uh, fundamentally what we're doing, which is buying high quality farmland. Uh, it takes 3 years to get farmland certified organic. That is basically the federal law around organic certification, and you get independent certifiers coming out once a year in order to certify that land. But yes, we also do a lot of things to help restore and enhance the soil biology increase crop rotations and put in pollinator habitat and a number of other things that are regenerative. When you're doing regenerative agriculture, you're increasing soil carbon is kind of one of the easiest things to measure, but there's a lot of other benefits that happen as well. But it really does result in healthier, stronger plants that produce larger yields and that's higher quality as well. So that particularly applies, for example, in blueberries, where our organic blueberries, the bushes are, and we work with Driscoll's as an off-taker. We grow some blueberries and they do the offtake for it. And our plants are growing faster than their other growers. They're larger, they produce more fruit per year, and more of that fruit ends up in the clamshell. It's called the pack out rate. Conventional farmers might have 80% pack out on there. We typically average around 86%.
Now, during those first 3 years, when you're getting the land certified, is it lying dormant, or are you growing other crops, or is there production coming off that land before it's certified?
Yeah, so theoretically, you could just leave it fallow for 3 years, and then, but what we focus on is actually looking at each field. I mean, we have 18,000 acres under management. We're looking at every field, 20 to 40 acres at a time, and designing really what the ideal crop rotation is for that particular field over a 10-year period. And for that first 3 years, we're looking at what that soil needs in order to really get it maximally productive, so that in that third year, when a farmer comes in and grows organic tomatoes, for example, that land is really incredibly fertile, incredibly productive, and ready to produce a great organic crop.
Now, I'd imagine in terms of the crop that you're producing, there's an economic premium attached to this. What certified organic, regenerative, what sort of economic benefit is there to the grower, in this case, your fund, versus just conventional farming?
Great. So if you're growing commodity corn, so generally it's a 50 to 200% price premium, kind of the short, quick answer. But if you're growing commodity corn on high quality land, your gross revenue might be $1,000 an acre, and rent is going to be around $300 an acre.
Okay.
And if you look at the split of profits between the farmer and the landowner, and 40% of farmland is leased. So leased farmland is just kind of a natural part of the business. But basically, if you look at it, profits are basically split 50-50 between the farmer and the landowner. So if we're getting $300 an acre rent, they're also making around $300. When we convert it to organic, and we convert much more land for organic, so that each of those farmers that we bring onto the land each get the full economy of scale. That's how we make it as operationally efficient as the monocrop farmer. We're just doing it on more acres. So if that tomato farmer comes to us and wants 400 acres of land for organic tomatoes, they're not going to make $1,000 an acre. Gross revenue is probably going to be closer to $3,000 to $5,000 an acre.
Wow.
And it's more profitable for them. And so what we've proven as a business is that we buy farmland that generates commodity rents of $300 an acre, take it through that 3-year organic conversion process, and then get rents of $750 an acre. So the farmers are making that amount or more on their land. We're making increased cash flow, and they're growing a much more valuable crop that's real food, as opposed to corn going to a feedlot or ethanol facility.
Got it. So obviously an economic benefit. Now, looking at farmland as an investment or as an asset class, what is this away from? Then I want to talk about how you guys are obviously adding a little bit of excess return onto that, or hopefully adding a little excess return. What does farmland look like as an asset class? Because you mentioned, was it 2% institutional ownership in the United States? How is it? Because I'm dealing primarily in financial assets. You get some real assets in the form of REITs, but this is something that looks very different. So can you describe what an investor in farmland might have experienced over the last 30 or 40 years?
Sure. So the average returns of farmland over over the past 85 years have basically been around 11% annually, unlevered, half from cash flow, half from appreciation, and very, very steady. So very little volatility, not correlated with other asset classes. And that's one of the reasons why I basically shifted my whole career in life into focusing just on farmland, because I was doing private equity and software companies and all that stuff. And when I actually looked at the numbers as a private equity guy for the returns on farmland, uh, I realized one, there's no zeros on there. People aren't losing money, for example, if the capital vintage isn't good. And two, the returns are incredibly stable and over time beat the average venture capital firm or private equity firm. So I was like, wow, so I can actually buy farmland, get cash flow, uh, have very, very low risk, and beat private equity and venture capital. I'm in.
So what happened in, because I was born in 1973, and I remember through the 80s, you had Farm Aid, and you had, I think, Willie Nelson playing. Was that just a product of family farms getting way too leveraged and extended from a debt perspective? Is that kind of what blew them up in the 1980s?
Uh, that is, there were a few factors, including uh, there were embargoes on corn. So basically, they had massively increased corn production uh, using a lot of subsidized debt at that time. Then there were embargoes that crushed the markets because all now corn farming was supported by exports
Got
to
it.
other countries. That got shut down and interest rates went up. There was a lot of inflation at that time too, and it just crushed agriculture as well as a number of other industries. And what happened is that uh, so today we're multifamily as an asset class is 50% leveraged. Office buildings are about 80% leveraged, unless you mark to market, and then like 120
It'll
or
be interesting in a
30%.
couple of years, I think.
Yeah. But on farmland, which is the same size as all those other asset classes, $3.8 trillion worth of farmland in the US, same value as all the apartment buildings or all the office buildings in the US. But today, there's only 13% debt on the entire farmland sector. So it actually went from having debt problems during that time period to basically having hardly any debt at all in the entire sector. And about half of that is operating lines. So there's very little debt on the sector.
That's pretty fast. Only 13%. That's actually fascinating. Is there an opportunity then to maybe add a little bit of leverage? If you're dealing with leverage that's that low to to hopefully kind of enhance returns a little bit if this is an area that you're interested in.
Yeah, and there's even essentially subsidized debt in the system through the farm credit system, where
Right.
you're actually rebated about 1.25% or 1.5% on it. Typically, though, we like to keep debt low. Typically, we're buying the farmland with 100% equity and then just using debt for the improvements on the land, and generally really keeping debt under 30%. So we find it's kind of a nice tool, but we don't want that to drive returns.
Now you mentioned that, and obviously the issues that some of the farmers had in the 1980s, you had the government kind of created a problem over here because they enormously subsidized the production of a specific crop with all sorts of incentives. And then of course, you had the global embargoes on the other side. Is there a concern that, being in a business that's fairly highly regulated myself, is there a concern that government regulation could come in and somehow interfere and get in the way of what you're doing and what you're trying to build?
Uh, we're not very concerned about that because, in fact, kind of the other side of it, which is that the government's fundamental mandate is to make sure that their population is fed. Not just year after year, but every day they have food in the supermarket. If you run low on food as a government, what's the saying? Every society is 3 days away from rebellion. So and so one, there's a lot of the U.S., for example, has an amazing crop insurance program, crop insurance that's subsidized basically 60% on there to make sure that the farmers stay in business year after year after year. But another thing that we do, and you mentioned you're in the investment industry, a key thing that we do is also diversify. So whereas there are really only kind of three main crops that grow in the Midwest, corn, soy, and wheat, we're investing in areas where there are about 300 different crops that are growing, and about 40 different crops are grown on our land today. So we really have, nice scale, but also a lot of diversification as well. And we think that's kind of the best.
And
It's a great model.
And so your farms, you're Northern California, you're Oregon, you're Washington. This is your third fund, correct?
That's right.
Okay. And the first fund, tell me about the process of going out and selling it and how well was it received? Obviously well, because you're here now on on the third fund. But what was that like and how quick was the uptake? Did people understand the story you were trying to tell?
So it took us 4 years to raise that first fund. And we ended up, kind of raising capital, buying farmland, raising capital, buying farmland over those first 4 years. I think there was a good amount of interest in it, but it was also very much an education process. People weren't familiar with farmland investing, farmland as an asset class. And so we really spent those 4 years, and actually I've spent the entire 15 years really just providing information about farmland as an asset class, what it looks like. Really, I think that commercial real estate is a great comparison to how we manage farmland and the kind of increased returns that we get, and then explaining how we add value to farmland.
Right. And second fund, I'm guessing, was a lot quicker in terms of launching that.
Second fund also took a while. That, it was larger than the first one, and it was also just still that educational process. I think we did improvements, moving from just that organic vegetable conversion process to adding permanent crops. And permanent crops are things like blueberries or fruit trees or wine grapes, things that you plant once, take a few years to kind of ramp up and get to maturity, and then you get long-term recurring cash flow.
And
But
how
we
about
added that capability in the second fund.
the third fund now? When did you originally launch it, and what's your expectation with getting it fully subscribed?
Yeah, so we launched it just over a year ago, and the uptake has been very, very good on that. We expect to close it in first quarter of next year, and really, there's we've done some things to really tighten up the fundraising process, tighten up the shorten the asset acquisition period. It's a wonderful time actually to be buying farmland today because those farmers that did maybe leverage up too much and now are exposed to these high interest rates. Some of those properties, actually, I've seen this is the best pipeline of properties that I've seen in the past 15 years. So we see a wonderful amount of properties. We've been able to buy our first two properties at great discounts. So that fundraising process is going well. We actually just about a month ago announced that Microsoft invested in us as well. They're an LP in our fund.
I was actually going to ask you that. I was going to ask if you could talk a little bit about that. How did you get them as an investor? Because I imagine that was a pretty big deal.
It's a pretty big deal, and they've been really wonderful to work with. They had heard about us, and they reached out about 18 months ago or so, and they were very interested in regenerative agriculture. So this is a $1 billion fund off of Microsoft's balance sheet, and it's called the Climate Innovation Fund. And basically is designed to try to offset the carbon density of their data center business, which is growing like gangbusters and producing a tremendous amount of emissions. So what they said as a business is we want to put $1 billion into helping solve the issue of the excess carbon that's going into the atmosphere. And they have a passion for regenerative agriculture as a potential solution. And we know that farmland can be one of the largest carbon sinks on the planet, number two, actually, after the oceans,
Wow.
for sequestering carbon. And Microsoft basically they wanted to uh, one, see if this is real, and we definitely passed due diligence. Two, they wanted to get access to all the carbon credits that we could produce. And so they're actually going to be buying the carbon credits that we generate. So we have a guaranteed off-taker for it, which will increase the fund's revenue. Uh,
Oh, wow.
and third, they
That's a,
wanted
that's a
to
cool
help.
angle, actually.
It really is.
Yeah.
And third, they wanted to help expand and grow our business so that we could sequester more carbon and so that other people could see that this was possible and they could sequester more carbon as well. So Microsoft invested directly in our funds as well, and they're shoulder to shoulder with all the other investors.
That's very cool. Now, in terms of other investors, where do you think this fits? What is a typical profile of an investor that would say, hey, Farmland LP, this is a pretty cool story, and it looks like looking at the deck is there's a heck of a value proposition behind it. Where do you think it fits?
We're not all Bill Gates. And by the way, Bill Gates is not the one who invested in this. This is directly off of the Microsoft balance sheet, totally
Yeah,
separate from Bill Gates. But he has about 5% of his investment portfolio in
in
farmland.
farmland, I know that. Yep.
And that 5% number is actually kind of echoed with some other people. Farmland represents a great, very stable, very steady form asset class that appreciates over time. And after that conversion period, spins off cash flow as well. And so, if the way I think about farmland is somewhat like where real estate would fit into a portfolio, but it also, to some extent, looks like a long term bond,
Okay.
except that bond appreciates in value as opposed to matures.
Yeah. Well, it's interesting because you look at, I think that anybody that's in my business, 2022 taught us a lot is that assets that you don't think are that correlated are actually much more correlated than you might think. Just speaking, specifically with obviously the worst bond market of for sure of my lifetime and a pretty tough year for equities as well. What was 2022 specifically, if you can share it? What was that like for your fund? I imagine it was pretty non-eventful. Your current investors just receive their checks and the property kind of appreciated. Was that what it looked like?
Pretty much, yeah. And so
Yeah.
we're adding value on a number of our properties. So there's blueberry bushes that are maturing. There's other permanent crops that are maturing. More land's getting converted to organic. So that value add process really just kind of continues to go on. There's very minor fluctuations in the rate of appreciation of farmland over time. And the markets are also different. You can get kind of a headline number for how did farmland do over that particular year, but the Midwest cornland is going to be different than West Coast organic vegetables,
Yeah.
organic blueberries, wine grapes, or something else like that. So
Now, kind of a couple wrap up questions for you here is first, so you began looking at this because you have a young daughter and you want to make the world a better place. Do you feel like now on your third fund that you're launching or in the process of raising for, does it feel like you've done that?
yeah, so I've been doing this 15 years, and
Yeah.
actually, when I started, I was 40 years old, and had basically a 30-year plan. I basically wanted to do something that I would do for the rest of my life. And so kind of had a midlife, not a midlife crisis, but a midlife assessment because
Sure.
I honestly really had accomplished the goals that I set out to accomplish when I was 40. And it may have taken a little longer, but really, I do feel like I accomplished those goals. And I kind of asked myself, do I stop or do I keep going? What's next here? And kind of at that halfway mark. And after about 6 months, I really got to the point where it's like, you know what? this is the best job on the planet. This is the best asset class. It's amazing, and we've really built something that is built to last. And the thing to do now is really just to continue to scale it up and scale it up more rapidly, because there's a tremendous opportunity and a tremendous benefit for people to be able to invest in organic, regeneratively managed farmland. So we've set some aggressive targets for ourselves. We expect to be $3 billion in the next 5 years. And I think we're on a good path.
Well, Craig, last question for you. People, if they're intrigued by this conversation, they want to learn more about Farmland LP and what you're doing. How do they find you? How do they reach you and get the information that they need to make an informed decision?
Great. They can go on the web to farmlandlp.com, and there's some contact us information there. They can also send an email to irteam at farmlandlp.com, and that's investor relations team, so irteam.com.
Awesome. This is a great.
farmlandlp.com.
This is a dynamite conversation. I think, that prior to living in Arizona, I lived in New York City for 10 years. And for those of us that live in cities, you kind of think you walk into a supermarket and you think that all of a sudden all this food and all these things that we have in front of us sort of magically just appeared there. And they didn't. There was a whole giant infrastructure behind putting them on your plate. And I think if we can, do it in a way that enhances the health of the soil, enhances the health of the farmers, enhances the health of the people that are consuming this food, and also in your case, hopefully enhance the financial health of the investors. I think that's a pretty cool thing. So, Craig, it's an awesome story, and I really appreciate you taking time out of your day to talk to us about it.
Great talking with you.
Yeah, this was great. And if you don't mind, Craig, I have to ask, because I'm sitting here thinking you're a bit of a disruptor. You really broke a model. You broke a model, and I welcome you breaking it. I think it's great. It's very exciting. But I'm curious, what's been the reaction to farmers that you've been dealing with? Because everybody's a creature of habit, and you're telling them we're going to do something really different. So what has been the reaction from the farmers you work with?
That's a great question, because
Great question.
when we buy farmland, we take it through organic conversion,
Yeah.
and all the farmers in the area are used to chem fallow. So
Oh, yeah.
spraying everything, all the fields have to be completely clean, which means no cover crops, no weeds, no nothing on there. A lot of runoff and soil erosion. And so the first thing we do is we go and we'll put some cover crops on that ground, and to most people, it might look like weeds, but it's a very intentional process. But we basically, from starting out, we don't try to proselytize. We don't try to talk to the farmers and convince them that what we're doing is great. And usually, they'll criticize and snicker and say things at the coffee shop and all of that. But after a few years, after they see like what we're doing and people are making more money, then they'll kind of come up to us and go, hey, that cover crop mix, can you tell me a little bit more about that? And so it really does have this kind of positive impact on what they're doing. And then the farmers that actually work on it, one of the great things about what we're doing is that we're buying that farmland and we're converting it to organic at a large scale, and then making it available to other farmers. And so if Costco, for example, comes to us and says, hey, you know what, I need 200 acres of organic tomatoes for next year. Well, this happened. We had this 30-year-old farmer who was successful at growing conventional tomatoes, but had never grown organic. And we said, hey, Garrett, do you want to grow these organic tomatoes? We'll kind of tell you what to do. Basically, grow it exactly like those conventional tomatoes, except use all organic inputs. And here's your off-taker. So he did that. Wonderfully successful. First time growing organic crops, made a ton of money on it. And now he's one of our largest organic farmers. So and now he also can help convert some of the other land that he and his family own to organic. So it really is necessary to kind of be that disruptor, to kind of go in with your head down, and let the farmers just kind of see what you do over time. And
Yeah.
it works.
No, it's great because it's like you're right. Farming comes down to walking the walk, not really talking the talk. So it's why I was curious. It's like, thanks, Craig. This is fascinating. This is really fascinating. And Brent, thank you for bringing this conversation forward. It's very timely, and I'm pretty stoked. I'm pretty excited about it. For people who want to reach out to you, Brent, who are listening to the podcast and maybe talk to you more about this, or maybe just have a conversation with you, what's the best way for them to get a hold of you?
Yeah, a couple different ways. Our phone number here is 602-255-0555. Somebody on my team will answer and they know how to get me. Pretty active on LinkedIn. I post something up there pretty much every single day, and it is me. It's not anybody else. And if people message me on LinkedIn, it is me that's responding to that. Website is tws.finance, and through the website, there's pretty much every conceivable way to reach us on there. But would love to have this conversation with people. If you're listening, you find it interesting. For me, anyway, it's been an educational process since I met the folks over there at Farmland LP, and I think it's a really cool asset class, and I think it's a great story.
It is. It is at that. And for those of you who are listening to this podcast, maybe for the first time and who are not yet subscribers, don't miss another one of these conversations. Okay. There are lots of great conversations to explore. So to fix that, just become a subscriber. Hit the subscribe button, hit the follow button. That way you're notified every time Brent drops a new episode of the podcast, and you won't miss another great conversation. And the thing I would add to that is, if you like these conversations, if you enjoy this podcast, tell people about it, for crying out loud. Word of mouth promotion is very welcome and is a very effective tool, as a matter of fact. So we thank you for that. Until next time, I'm Bill Tucker on behalf of Brent and everybody at the Wealth Stewards. Thanks for taking the time to listen today. And until next time, I will remind you that you can go out today and make today a great day or not. The choice is yours. Use it wisely. Until next time.